What's up with it? I'm CJ, and in this video, we're going to be talking about why following your rules may not be the answer. The lie of follow my rules and everything will be perfect. Will it though? Let's talk about it. So, in trading, you definitely, this is not a video saying you don't need rules. It's not what this is. But it is an in-depth discussion of why rules alone, isn't gonna save you. So in trading, you definitely, like I said, you do want to have some rules at play. But if you're not able to adapt and be very versatile when it comes to, trading in the markets, your rules don't really matter. And unless, you basically have a trust in maybe a system, a software, a strategy that you've built for yourself and you understand, but there are some nuances to where you have to use your head a little bit. You have to think critically and you have to make decisions in real time and you have to make decisions that will help you in that moment. Now, say for instance, your take profit is a 1 to 2, right? And you're at that 1 to 2, you're up, say you're 1%, you're risking 1,000 to make 2,000, right? Say you're up $1,995 and you're sitting there watching it, and in the next minute, there's about to be red folder CPI come out, and you're looking at you up only a point one of a pip, and that's all you need. In that moment, let me ask you, are you gonna say, I'm just gonna hold it to TP and let's see what news does? Or are you gonna go ahead and say, click and close the trade because you just made $5 away from your goal? Now, see, in moments like that, you have to be able to think critically. Your rules are technically getting broken in a way, but you're not losing. You just had to make a very, maybe a hard decision, but you had to make a very quick decision in a moment that, there was money on the line. So should you have closed it at 1,000? Should you have closed it at 500? No, but you're right near your goal, and you're gonna leave it up to fate and luck. That doesn't make sense. So in that way, a rule could actually hurt you because you're missing out on money after it smashed down from the CPI, NFP news, and then stops you out, and now you mad. But you had the opportunity to close it. You were just so stuck and rigid in your head that you couldn't see those profits, which is okay because now you can take that information and that data from that lesson and that loss and say, okay, next time, maybe if I'm, there looking at it, if you're not looking at it, in your sleep, whatever. But if you're actually in session, you're looking at it, you're seeing it, maybe you can write down and say, hey, next time I'm a pip or two away, I'm just going to go ahead and close my profits because I'm okay with leaving a bit of money on the table to make sure that my goals are hit. Nothing wrong with that. So that's one example of how, having rules in play, but thinking that they're going to save you, it can actually hurt you. Now, let's think of another way where rules could hold you back in a way. Uh, honestly, I don't think that's the point of this one. I honestly just wanted to touch on that right there because I don't want to go on a rant and just try and make it seem like rules aren't important. You need rules, but you have to be able to think and know as well what market you're in. You have to be able to think quickly. You have to be able to make decisions that are going to be for the betterment of you. So I feel like that was a good example. And if you can visualize and you trade and you understand what I'm talking about, then you can know why adaptation is very key in that moment because you might beat yourself up or you might be upset later about the fact that you left so much money or pips on the table that it affects you mentally, which you don't deserve that, and we don't have to be in the market thinking like that. We deserve to, what I'm saying, get our bread, get on up out of there. That's all it's about, right? So the ways that you can eliminate that is to be able to have a little bit of leeway. You got to give yourself a little bit of leeway, yo. If for example, you're close to take profit, but you're trying to make money from your spread. Like for example, your spread over the market close charge you 150. So now you're going to move your take profit up to 150 more than what your 1 to 2 is, or your 1 to 1, whatever you trade with. And now the odds of it being hit are a lot less because you're trying to be so rigid and make back make sure the broker doesn't get anything. You know, the broker is there to make their money too. So sometimes you have to say, okay, I'll let them take their fee and I'll take what I can from my level that I'm looking at and what I'm trying to make out of it. And on the screen, you can see right here below this trade, I was risking 1% to make 2%. And as you can see, it's 1.7%. So I left about, uh, it was the spread was 100 over the market close. So it was about 1,800 that was made in this specific trade. But if I had been so rigid about the 1 to 2, I could have, as you can see right here, I could have been up here and potentially not got stopped out. I seen this trade drop off as soon as it hit take profit and literally hit stop loss. And as you can see, it had a beautiful move to the downside during New York, but that isn't what we're focused on. This was our move right here. But I'm just saying it literally dropped off in a matter of seconds from some JPY news that came out last night. So, that was an example of why I got a live trade right here of why, you got to be able to set your levels, leave your levels, and be okay with not making, maybe 100% of what you were trying to make. 1.7% is 1.7%. So whatever that is of your account or whatever you're working on, be thankful for those percentages. Be thankful, for those small wins because when they stack up, that's the goal. You know what I'm saying? You're not going to win every trade. You're not going to, lose every trade. But the goal is to make sure your risk to reward is good. And if that means leaving a few pips on the table, hey, I'll break my rules for that. You know what I'm saying? So this was pretty much the only trade that we took. Today is 123. It's 418. The markets are closed. It's Friday. So, we done with trading for the week. And this is the recap of this trade was taken Wednesday. I took it during New York and, set up a nice risk to reward. I had got my stops below this trend line down here and I risked about 53 pips. And as you can see, I also had this other trend line drawn up right here, showing a little bit of, resistance to the upside. So I was like, okay, if we get a nice break above there, this would be a nice wedge that I'm willing to trade out of coming off this nice trend. And what did you see? I got my entry right here, a beautiful engulfing candle. So I just waited for the hour chart to close right there. Got a good entry out of this wedge right here. Sure enough, got the 1 to 2 set. Nice stop loss underneath structure. I could have put my stop loss actually maybe underneath this low right here and could have gotten out more around this area or something. But you gotta be willing to, you know, protect your capital and also uh allow the trade to work. So this trade jumped up, went up a nice bit, came all the way back down, almost near break even, not quite. And at that point, it was already a stop profit set because I had already went up a 1 to 1. So it was no risk upon this trade. I wasn't going to lose anything. So, sometimes you could have rules to where it's all or nothing. It's stop loss or take profit. And that could stop you from, what I'm saying? That's a small rule that you might have to tweak. It's not really about breaking your rules. It's about like being able to tweak it to where you're not holding yourself back. So back to this one, like I said, it dropped off, hit that level a little bit, and then sure enough, when the JPY news came out later in the day, hit take profit and duck right back off. So that's why you also got to be able to willing to take some bread out the market because you never know what's going to happen in the economy. You never know what's going to happen with whether you're trading forex, futures, stocks, uh, gold, just straight metals, whatever. You got to know that it can flip at any time and nothing is guaranteed. So you know, keep that in mind. But I wanted to share this trade, what I'm saying? There was some nice profits, solid setup, nice engulfing candle, nothing fancy, trend lines, engulfing candles, finding a nice support and resistance that you need to break or a wedge, whatever that may be. This channel is not really about finding that perfect strategy, what I'm saying? But it's more about tuning your mind to whatever strategy you decide to trade. You can optimize yourself to see those wins from it because every strategy can produce profits and stuff like that, whether you trade engulfing candles, some type of software, uh ICT concepts, whatever. Everybody can make bread, bro. It don't matter what system you trading, But if your mindset ain't on point, it don't matter what system you're trading. So that's what this video is dedicated to. I just wanted to remind you, if you feel like you broke your rules and it helped you in the long run, and it's continuing to help you, you know, don't be so hard on yourself. But never change your rules in the middle of like a test trial of trades or something. You got to figure that out, you know. But the small tweaks, man, that's what this one is about. It's a kind of a controversial, more of a polarizing topic, but the goal is to be able to get you to understand that if you made a mistake, it's okay. Readapt, get back in the game, keep it pushing, man. Because setups like this are waiting on you, and stop losses are gonna make you get better. You can't run from the process, man. So, with that being said, you see the trade, you see the profits right here, man, and you got the mindset. So let's get it. I'm gone.